Good afternoon, Mr. Buffett and Mr. Munger. My name is Kevin Truitt from Chicago. Mr. Munger, at last year's shareholder meeting, you stated that you didn't feel that the concept of the cost of capital made true economic sense. Would you explain why you felt this way and what you would do to replace it with anything?
Well,
Cost of capital.
cost of capital first. Obviously, considerations of cost are important in business. And obviously, opportunity costs, which is a doctrine of economics, really a doctrine of lifesmanship, are also very important. And we've always had that kind of basic thinking. Of course, capital isn't free. And of course, you can figure cost of capital when you're borrowing money, or at least you can figure cost of loans. But the theorists had to develop some theory for what equity cost. And there they just went bonkers. They said if you earned 100% on capital because you had some marvelous business, your cost of capital was 100%. And therefore you shouldn't look at any opportunity that delivered a lousy 80%. That is the kind of thinking which came out of the capital assets pricing models and so forth that I've always considered inanity. What is Berkshire's cost of capital? We have this damn capital. It just keeps multiplying and multiplying. What is its cost? You have perfectly good old-fashioned doctrines like opportunity cost. You know, at any given time when we consider an investment, we have to compare it to the best alternative investment we have at that time. We had perfectly good old-fashioned ideas that are very basic to use, but they weren't good enough for these modern theorists. So they invented all this ridiculous mathematics, which concluded that the companies that made the most money had the highest costs of capital. Well, all I can say is it's not for us. Now, the other half of that question I leave for Mr. Buffett.
Yeah, what you find, of course, is that the cost of capital is about 1/4% below the return promised by any deal that the CEO wants to do. Very simple. You know, we have three questions on capital with capitals around, and leaving aside whether we want to borrow money, which we generally don't want to do. And one is, does it make it more sense to pay it out to the shareholders than to keep it within the company? The sub-question on that is, if we pay it out, is it better off to do it via repurchases or by a dividend? The test for whether we pay it out in dividends is, can we create more than $1 of value within the company with that dollar than paying it out? And you never know the answer to that, but so far the answer, is judged by results, is yes, we can. And we think that prospectively we can, but that's a hope on our part, and it's justified to some extent by past history, but it's not a certainty. Once we've crossed that threshold, then do we repurchase stock? Well, obviously, if you can buy your stock at a significant discount from conservatively calculated intrinsic value, and you can buy it in reasonable quantity, that's a use for capital. Beyond that, then the question becomes, if you have the capital, you think you can create more than $1, how do you create the most with the least risk? And that gets to business risk. It doesn't get to any calculation of the volatility. I don't know the risk in See's Candy is measured by its stock volatility, because the stock hasn't been outstanding since 1972. Does that mean I can't determine how risky a business See's is because we don't have a daily quote on it? No, I can determine it by looking at the business and the competitive environment in which it operates and so on. So once we cross the threshold of deciding that we can deploy capital so as to create more than $1 of present value for every dollar retained, then it's just a question of doing the most intelligent thing that you can find. And, you know, that is the cost of every deal we do is measured by the second best deal that's around at a given time, including doing more of some of the things we're already in. And I have listened to cost of capital discussions at all kinds of corporate board meetings, everything else, and you know, I've never found anything that made very much sense in it, except for the fact that it's what they learned in business school, and it's what the consultants talked about, and most of the board members would nod their head without knowing what the hell was going on. And that's been my history with the cost of capital. Now, moving on to the big ideas, you know when you've got a big idea, and I can't tell you, you know, exactly what happens within your nervous system or brain at that time, but we've had a relatively few big ideas, good ideas over the years. I don't know how many you think we've had in aggregate, probably in career, maybe 25 each or something.
If you took the top 15 out of Berkshire Hathaway, most of you people wouldn't be here. So roughly one every 2 years.
Yeah, one every year or two. And sometimes there'll be a bunch of them, like in 1973 and 4. But the problem is, for us, is that big now really means big. I mean, it has to be billions of dollars to move the needle very much at Berkshire. But I would say that when I would turn those pages 50 years ago in the Moody's manuals, I would know when I hit a big idea. I've got a half a dozen of them that I keep the Xeroxes from those reports around from 50 years ago, just because it was so obvious that they were incredible. And that happens every now and then. When I met Lorimer Davidson, you know, in end of January 1951, and he spent 4 hours or 5 hours with me explaining GEICO, I knew it was a big idea. 8 months later, or probably 10 months later, I wrote an article to the Commercial and Financial Chronicle on the security I like best. It was a big idea. When I found Western Insurance Securities, I knew it was a big idea. You know, I couldn't put millions of dollars into it, but I didn't have millions, so it didn't make any difference. And we've seen things subsequently, and we'll see. You know, if we have a normal lifespan, we'll see a few more before we get done. But I can't tell you that exactly how. I can't tell you exactly what transpires in my mind that says, you know, flashes a neon sign up that says this is a big idea. What happens with you, Charlie? Actually, I have a real system. My idea of a truly big idea is one I get and I call Charlie and he only says no, rather than that's the worst idea I've ever heard of. But if he just says no, it's a hell of an idea.
Yeah.